we want to see where Tesla fundamentally could go and actually make sense next year. Well, you're going to times the 2024 full year EPS estimate by, let's call it 65, right? At a 65 times multiple, that is $367.25 per share. Today was a game changer for Tesla stock. Short sellers are in deep trouble because Tesla is likely going much higher. We are going to go over quite a few things here in this video that backs up my claims. Now, I make some outrageous claims sometimes. I'm not afraid to share my opinions to be right in a big way or to be wrong in a big way. This time around, it looks like we have been correct on the Fed and the outcome of this week. Now it's Tesla's turn to go higher. Yesterday, Tesla really didn't participate in our markets. And today, Tesla's up about 5%. A true outperformance kind of day. If you look at other big tech names, they got obliterated, including Microsoft, Apple, Amazon, Google, basically all of them. So where are we going next for Tesla? We're going to get into that here in this video. I hope you guys like it. If you do, hit that like button and subscribe to the channel. We're also going to talk about some data coming out tonight with China. We're going to get a lot of data for China, and China's the second largest economy in the world, the second largest market for Tesla. It can be somewhat important. And we do have some softer economic data coming out for the US tomorrow morning. We have a lot to get into in a very short amount of time. Quick congratulations again to the trading community. We hit another over 50% winning trade today on Costco puts. If you guys want to come join us, link down below in the description of this video. So let's start with the basics here and acknowledge what happened today. Tesla stock outperformed. Some of this could be up for speculation, whether or not we could get good news soon. Sometimes whenever a stock is just randomly outperforming, it could be a good sign for good news to come. Again, that's a little bit more down the realm of speculation. I think it's a little bit simpler than that. We broke this down in the last video. Check that out if you guys have not seen it. But we'll make sure everyone's up to speed if you did not watch the last video. Yesterday, there was news Tesla was recalling 2 million vehicles. Really, that's an over-the-air update that fundamentally changes nothing for Tesla. Problem solved. Tesla stock didn't do all too great yesterday. Definitely not on pace with the broader markets. You could make the argument that Tesla is just catching up to the move that we should have seen yesterday. But I think it's imperative that you guys understand this. These names that underperformed today, Apple, down a little bit today. It was down a lot more. It was down 1%, a little bit over that at one point. Google, down 1%. Microsoft, down 2.3%. Amazon, down 1%. All of your Magnificent 7 stocks really did poorly today. That's because they all don't benefit from rates going lower. They all benefited from rates going higher over the past 2 years. That's no longer the case for 2024. Markets are now expecting huge rate cuts, and we'll get into that here in just a second. But Tesla, I can make the argument on CNBC in front of everyone that Tesla is very specific in terms of the level of upside, the level of risk, and the level of safety that you can find in Tesla is unparalleled. It's unmatched in interest rate sensitive names. Small mid-cap stocks, well, if they can offer you a higher potential return, they're a lot riskier. So on a risk to reward basis, Tesla makes the most sense, especially for big money. And I think there's a lot of people that bet against Tesla on a day-by-day basis that are starting to be proven wrong. The only thing that makes sense to me, the only reason you might want to be short in Tesla is if you think some kind of severe recession is coming next year. And even the data we got today with retail sales coming in at 0.3% positive month over month. Estimates were negative 0.1%. All of the data we continue to get shows we're probably not going into recession. Historical kind of precedents as well, election years tend to be pretty good because the government tends to spend a lot of money, more money than they typically do in any other given year, which sounds crazy because the government spends like they are drunk. But you can expect them to spend more money next year. And odds are, well, the current president will not win the re-election if we go into a recession. And like literally that's never happened before, right? So you are very incentivized if you are the government to keep us out of recession, whether or not that means cooking the numbers or just organically avoiding a recession. Does not matter. Point is the same. Odds of a recession next year are far too low to be pessimistic and short on Tesla when Tesla has already seen the margin contraction, the EPS contraction, and the level of fear that you've seen even back in January when everyone thought there was nobody at the wheel behind Tesla, that Elon was not leading Tesla. All of those concerns should be getting put to rest here. And what that essentially means, just to boil it down, is Tesla stock is probably significantly undervalued, especially if there's no more price cuts and if margins can improve from here. So down to the actual fundamentals themselves. I mean, it makes a lot of sense why Tesla is going higher today and probably way higher over the next coming days, weeks, and months. And really, if none of that made any sense, interest rate sensitive names are going to do well in 2024. Your big tech, probably not. You probably don't want to be an index level investor because those names had the benefit from rates going higher over the past couple of years. A stock like Tesla fits both of these categories. It's kind of like a big tech name with a degree of safety like a big tech name. It's definitely not as risky as a SoFi, a Fubo, a Palantir, a Robinhood, or any of those other stocks you could invest in that are small or mid-cap names. But Tesla also has growth curve that's kind of ridiculous, right? Tesla has the highest growth by far out of any other big tech name. The degree of interest rate sensitivity is unparalleled as well. So as rates go down in 2024, Tesla just stands to benefit entirely from all different aspects of whether it is raising capital, expanding the business, margin improvement, raising prices, everything will be benefited next year. So if you're a big money fund looking to put some money to work, where are you going to put it? Sure, you might put some of it into some speculative small or mid-cap names, but a lot of money is going to go into Tesla. That's the bottom line. This could start a massive rally for Tesla stock, and we'll get into where I think Tesla stock can go. And yes, it's well above $300 per share if you are curious. But first, before we get into that, we do have a new AI investor sentiment survey that is out. 51.3% of investors are now bullish, 29.4% of investors are neutral, and 19.3% of investors are now bearish. This is by far the lowest reading of bearish investors that we have seen basically ever. Well, at least in recent times. You'd have to go back to 2021 to see, this little of bears out there. You're also 1 point away from a 1-year bullish high. The 1-year bullish high was on July 19th, 2023 during the AI Hopium, and you were at 51.4%. You're currently at 51.3%. So you are very bullish out there in the markets, and I think this fundamentally makes sense. It's a lot more fundamentally justifiable, in my personal opinion, to see the broader markets do well, small mid-cap stocks like Tesla, because rates are going down, and that is fundamentally going to be good for stocks in 2024. Whereas over the summertime, it was AI-based, it was a lot of hopium. Besides NVIDIA, nobody was really showing any AI revenues or any AI profitability, nothing even close to it. Now, this is also fascinating. What's going on in our markets is kind of crazy. So the Fed was just pricing in one rate cut back in September, and then the Fed yesterday updated their summary of economic projections, which you can see here, to show the Fed funds rate likely to be around 4.6% by the end of 2024. That was implying 3 rate cuts. As you can see from this chart, that is the orange yellowish line here. Well, following the Fed and the Fed giving us more rate cuts than they previously forecasted, the markets said, No, Fed, you're going to cut rates 6 times in 2024. Yeah, that's what the markets are currently pricing in for rate cuts next year. As you can see here, you have 1, 2, 3, 4, 5, 6 rate cuts that are priced in. This is the highest probability at 39.2%. And this is with good economic data. If we start to get a little more weakening of the economy and economic data, you might start to price in more rate cuts than that. You might start to price in 8, 9, 10 rate cuts, which could get absolutely ridiculous. The second closest probability is 36.5%, and that would be 5 rate cuts next year. So the markets said, yeah, Fed, you're going to start cutting rates. Well, you're going to keep cutting those rates. Basically, every Fed meeting of 2024 starting in March besides December. So that means the first rate cut is expected March, and then May 1st, and then June 12th, and then July 31st, September 18th, November 7th, and then a pause December 18th, 2024. Now, I think if you want to get very simplistic on our markets, boil this down to the most simple way to understand this, why stocks are going higher, why now is probably not the right time to be constructively bearish. Sure, if you're bearish for next week or the week after that, who cares? I'm saying over the next coming months, you don't want to be bearish. This is why. We have almost a record amount of investable cash out there in the marketplace. This is cash, treasuries, this is money in money market funds. You have one of the lowest levels of stock allocation in the history of forever. Hedge funds and institutions were more invested in stocks during the crash of 08 and 09 than they are today, or at least the last time that we got this data. So those are 2 reasons. You also have the fastest Fed tightening cycle of the last 40, 50 years now, which is coming to an end, and you have the economy holding up. 4 reasons, essentially, that all come together to fit one narrative on why stocks are going higher. I will be the first one to get bearish, though, when the economy does start to turn down and look like we are actually heading into a recession. But I think we need to talk about that as well. I think you can make the argument, obviously, we've been in, to some form, a rolling recession for the past 1.5, 2 years now. See, some deflation that benefits the masses could open the door for billions, hundreds of billions of dollars of extra money that could be spent to fuel the economy. Now let's do a little bit of simple math, and I really want to focus on energy, gas, right? That's one of the largest expenses that people face every single day, especially for lower middle income households. Gasoline is very expensive. If you drive a lot like I do, then you understand that. Let's say you just save $5 a day because gas is no longer $5 a gallon or $7 a gallon. Now it's $2.90 or whatever it is by you. I think it's a fair argument to say you're at least going to save $5 to $10 a day on gas prices alone. Well, if you times that by 365 days a year, I know these are very arbitrary numbers, and who knows what the actual number is, but that could be savings of about $1,825 a year per person. Well, let's say there's 200 million working, driving citizens in the US. There's probably far more than that, considering the immigration that we have seen over the past, couple of years. Those individuals also spend money in the economy. That's $365 billion of additional spending that we could see in 2024 that maybe was being restricted at some points in 2023. And this is just one simple way to make this calculation. You could use 250 million citizens. I mean, the number could be higher than that. Who knows? We need to get another consensus. Point is, you're looking at hundreds of billions of dollars that was being spent in just energy a year, which could be passed on to savings to consumers, which could theoretically be spent elsewhere. So you could make the argument that energy price is going down. The deflation that Walmart's talking about, their CEO, we've covered this a couple of different times on this channel. The CEO of Walmart says there is a lot of deflation that is coming over the next coming months. Well, those added cost benefits could also help spur the economy. In a weird way, you could actually make an argument that some of the disinflation we're seeing, besides housing, besides used vehicles, well, could actually help spur the economy in 2024, could actually help reaccelerate the economy in 2024. That could be great news for stocks as well. Now, before we go ahead and get into the charts with Tesla, where I think Tesla's going, some of the option activity and short position numbers for Tesla, let's talk about the data coming out later on tonight. This data is for China for obvious reasons. China is important for Tesla, second largest market for Tesla. In Q4 of this year, it could be the number one market for Tesla. We're going to have to see. So their numbers are important. Let's just be honest and let's not fool ourselves. House price index year over year is expected at negative 0.2%. This data again will come in between 8:30 p.m. Eastern Standard Time tonight and 9 p.m. Eastern Standard Time tonight. Industrial production year over year expected at 5.8%. So very healthy numbers there. Retail sales year over year expected at 12.2%. Another very healthy number there. Fixed asset investment year to date and year over year is expected at 3%. Another solid number there. And the unemployment rate is expected to stay the same at 5%. So if those numbers come in as expectations, I expect that's probably going to be good news for Tesla as well. Tesla specifically, probably more than the broader markets. Now, we do have some softer data coming out tomorrow. Tomorrow morning at 8:30 in the morning, you will get New York Empire State Manufacturing Index. That's expected at 6. Some people expect this around 2. We'll see. Last month was 9.1. I don't think that's going to cause a huge movement, but we've seen crazier things happen. Capacity utilization for November will come out. Industrial production year over year, manufacturing production year over year, and month over month. The big three, though, will be at 9:45 p.m. You will get S&P Global Composite PMI, S&P Global Manufacturing PMI, S&P Global Services PMI, especially that services number. That is going to be probably the most important one. So not expecting big market moves off this data, but if we get any crazy report, whether it's good or bad, it definitely can help add to momentum in our markets. Now, Tesla currently has $21.2 billion worth of short positions. The float is sold short 3.26%. Tesla's by far the most shorted stock on our markets. And after today's 5% gain, you probably watched at least $1 billion of losses for the hedge funds and institutions. Now, it's going to take a while for them to change their stance from bearish to bullish. I think when that actually happens is when Tesla starts to raise prices in the US. That's going to show a lot of confidence in the US economy, in the consumer, a lot of confidence in demand for Tesla. So I think that's going to be a big moment. Now, later on this month, hopefully, if not in January, there's a lot of deep rumors that FSD is going to enter into the Chinese market. If that happens, that is going to be fundamentally huge for Tesla. And at that point, I do think that is going to crush a lot of the short thesis as well. So I do expect this to add to buying pressure for Tesla, although I'm not convinced the short position and shorts covering is going to be the biggest factor that contributes to Tesla. Probably just capital coming into our markets, into interest rate sensitive names, organically people saying, hey, Tesla looks like a strong stock for 2024. That's probably going to have the biggest impact on Tesla stock, but shorts covering definitely will also have an impact. As far as Tesla's option activity today, you have seen 1,715 orders totaling $1.38 billion with a positive order value of 54%. So a pretty strong day for Tesla option activity. Probably a lot of new options being placed today, a lot of new bullish bets if I were to imagine, considering 1,715 orders is a lot for any given day. Now, I think on a technical basis, this is the most exciting thing that we've seen today for Tesla. If you connect the peak here from Q2 earnings, where Tesla stock hit $300 per share, connect this line to the prior peaks, it basically goes in a straight line, even down to as recently as November 29th, you also got rejected at this line. Well, today, you gapped above it. Today was a very strong day. You went above the 100-day moving average today, this line, and now you're at $251.05 per share. Anytime you break above a longer-term downtrending line like we did today, you tend to get quite the upside. You can break out above the first point of resistance on this line, which would be $300 per share, which in and of itself suggests we're probably going above $300 per share. Now, I could spiel back to you guys everything I said in this video as the reasoning for this, but if you made it this far, then you probably understand exactly why. Rates going lower, economy holding up, Tesla being able to raise prices, margins improving, so on and so forth. And even down to the biggest factor that actually, dictates if a stock goes up or down, it's actually EPS estimates. And what you've seen with EPS estimates are fantastic. I mean, this is the first time in a long time where estimates are rapidly rising. So 3 months ago, the 2023 full year EPS estimate was $3.36 per share. Now it's $4.08 per share. So that was a huge jump in EPS estimates for 2023. But take a look at 2024. 1 month ago, the EPS estimate was $3.92. Today, it is $5.65 per share. That is over a $1 jump. That is like a 25-30% increase to EPS estimates. Now, let's go ahead and do some simple math here, right? If we want to see where Tesla fundamentally could go and actually make sense next year, well, you're going to times the 2024 full year EPS estimate by, let's call it 65, right? At a 65 times multiple, that is $367.25 per share. Tesla, well, is trading at about 65 times EPS. At least trading at about, $4.08 for current 2023 EPS estimates. Times 65, that's about $265 per share. So Tesla's trading roughly at about 65 times this year's earnings. Once you get closer to 2024, into 2024 itself, Tesla will start trading based off the next 12 months of EPS, which if you still have it at a 65 times multiple, is $367.25 per share, well above $300 per share. Well, if you increase that multiple a little bit, because, hey, rates are expected to get cut 6 times next year, and we're expected to avoid a recession, let's say that multiple goes to 75, which is very, very low for Tesla, historically speaking. Well, then you have Tesla at new all-time highs at $243.75. You guys understand what I'm saying here, right? Tesla's stock is likely going to all-time highs within the next what I would imagine 3 to 6 months. 3 months is pretty aggressive. 6 months is pretty reasonable, in my personal opinion, if earnings continue to come in and the economy continues to hold up. So I don't think 300 is where we stop. I think around 315 to 320, 325 is where Tesla maybe slows down for a little while. Maybe that's where we actually consolidate and kind of trade sideways. That would be the highs that you've seen during the summer rally of 2022. Over 1 year ago, we have still not hit those same levels. After that, then that's when earnings start to come in and Tesla makes a rally to new all-time highs. I expect new all-time highs coming next year. Let me know what you guys think down below in the comment section. For whatever reason, if we get bad economic data, if something bad happens out there in the markets, well, your 100-day moving average, your 50, and your 200-day moving averages are going to hold a lot of support. I think even considering Tesla has rallied quite a bit, the risk reward makes a lot of sense to be buying Tesla right now. But again, we've had a pretty strong rally the last couple of days, the last 2 weeks, 3 weeks or so. Could you see a flat or down week? Sure, obviously. But the next 3 to 6 months, I think you're going to make a whole lot of money. Let me know what you guys think about this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us as well, come hit some of these home runs with us. Link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.